Hi everybody, so we're going to focus on predicting pullbacks. Why? Because that's trade location, alright? So, focusing on predicting pullbacks. So how to do it, what to look for, what's the structure, etc. I'll go over all that. Alright, now why do we do it? Because that's where the reversal is going to occur. Why? Because that's where to anticipate a reversal. You need to know this. Alright, now here's the thing. You have the first thing to do is understand the structure of what's going on. So let's say you have a rally. Right? What are the components of that rally? Here you'll have a breakout, right? So there'll be follow through and then it'll become a rally. But prior to that, you have here a reversal bar. Call it RB. Reversal bar or reversal thrust. Right? Call it reversal thrust. You have a reversal RTH, reversal thrust. So this component has 1, a breakout, 2, a reversal thrust, and 3, before that, you have reaccumulation. Okay? So in a rally, if you're looking at buy the pullback, you need to identify A1, obviously the breakout. 2, I know I call it reversal thrust, but it's actually a markup bar. Maybe I'll just call it MB, markup bar. The markup bar, you know, it's creating the rally. It's not creating the rally, but it's like the start of the rally. And before that, you have the accumulation area. Accumulation or reaccumulation, same thing. Right? In this context, it's the same thing. Right? Typically, accumulation is at the very bottom, and after that, you have reaccumulation. But practically speaking, it's just accumulation here. All right. So what happens is, you have, first of all, you have a rally. It pulls back, and mean reverts. Where does it go? It goes to in this area, this accumulation area. And that's where it will likely have a reversal. All right? So we're going to examine rallies now. Sometimes they'll have breakout bars. Sometimes breakout bar will be the markup bar. But in either case, we're looking for the accumulation area. And in that accumulation area, you will have a very important level. You have the max accumulation level, maximum accumulation level. That maximum accumulation level can be identified by any type of developing POC. It is at that max accumulation level that price has a high probability of buyers stepping in. Why? First of all, it's at the lows. It all pulls back all the way. So supply tends to get exhausted after this move. It's going all the way low. And in this reaccumulation level, that level is the strongest level of that accumulation. And chances are you have existing buyers and possibly new buyers that are looking to buy there. And if they do, and you go to a low time frame and see them buying, it'll give you the reversal. So now let's talk about this a little bit more by using charts. So first is, let's take a look at the ES today. All right. And the thing is, if you see a level and it's not going there, it might go to the second level. So just wait. Just wait. All right. So we see a level here. First, we see it has the rally component. It has a breakout component. The breakout component here, I told you about the three components. Rally, breakout. Rally has a breakout component, a markup bar component, an accumulation component. And let's put the fourth one, which is your max. Let's call it max accumulation. This max accumulation is where the reversal is very likely. The probability very high. Alright, so 4-component breakout, markup bar accumulation area, and within that a max accumulation level. Alright, now the key is, let me just show you. You have the rally, you have the breakout. The breakout, since it's coming from that support area, it actually is the markup bar. And then before that, we're looking for an accumulation level and find something here. It's not, it's not at the pullback low. It's pretty high up, right? But there's usually a level here, and we'll see if the price respects it or breaks through it. Since it didn't really pull back a lot, it didn't give deep prices. It's probably just some absorption of these highs to go higher. The price didn't respect it and it continues to go down. So now this is the next rally. What are we looking for? The 4 components, right? So typically there's a breakout. Consider this a breakout, or this the breakout, or this the breakout. This breakout just happens to also be the markup bar. Markup bar has below it, or right next to it from support, it has your accumulation area. That accumulation area has a level. That level is very strong. That is your max accumulation level. And that's what gets targeted. And that's where buyers come in and create the reversal. So let's go through more examples. Take a look at crude. Here's a distribution example. First thing to note, do we have a rally? Yes, we do. So let's analyze the structure. The structure is what? You have a breakout, and then you have a what? A distribution area. In that distribution area, you have a max distribution level. That was over here, right? But there was another level over here. Over here, let's get this red bar out the way. Sometimes they don't. So that level right here is what got respected. Tap and reverse. Bingo. So these were the 2 levels. One here, one there. And this is the one that got respected. Right? Give more examples. Go to gold. Gold, same situation. You have a rally, you have a breakout. Let's take a look at before the breakout, the markup bar, and that's right here. How do you know that that's a markup bar? Because it comes right from support, and at that support you have a bunch of bars. That bunch of bars is your accumulation, and there's a line there. That line is very strong. Right? So it was actually in here. And we got tapped once, tapped twice, and went. So this one's here. There's another one that's here that was respected by this low. See this low? Why did this low bounce? It bounced because this is your markup bar, and this is your accumulation or absorption here. Tap, rally. then go to the next level right here. Let's go to copper. You have somewhat of a breakout follow through rally, pull back, taps the line, and rallies. Go to euro. Yeah, it has two levels, right? One is here, and the other is here. It decides to respect the first one. It goes to it, reverses, and rallies. See? Right? So this is a strong level though. This one, a lot of sideways movement and a thrust break. So if it goes down here, we'll see how it reacts. Right? So let's go back to this. So the idea is predicting pullbacks. Where do pullbacks go? The first thing you need to do is understand the structure of a rally. When you have a rally, you have accumulation, a markup bar, strong markup bar, which thrusts up, and it continues. And that markup bar may be the breakout, it may not be the breakout. If it's not the breakout, then you have a breakout. That breakout then has follow through and becomes a rally. Once it becomes a rally, you can see the structure of the rally and break it down into a breakout, which may or may not be. If it's not, you'll have a separate markup bar. Markup bar will be coming from a support area, which will have sideways bars that represent your accumulation. And within that accumulation will be a line. That line is the max accumulation line. It's the level that has the most amount of accumulation. And it is very hard to, it's not easy to break, because by the time price gets there, right, it's testing the markup bar, which for some reason, folks may call this fair value gap because they see a big bar or something like that. But the idea is actually, it's just a markup bar because after accumulation comes markup. And in that accumulation, you'll find a line of max accumulation. Price tends to go in that area and then go back. It will target that area. It will target that area. Why? That area is a very strong demand area. There's a lot of orders. Liquidity. How do you know? Because there's a lot of volume. What was volume before it was volume? It was liquidity, it was orders. So orders became volume. So when orders were executed, it became volume. It goes up, and if it's still there, it'll go down to that area and reverse from there. So again, the key is understanding the structure of the rally. The rally has a breakout. It may or may not be a markup bar. Before a markup bar comes accumulation. And in accumulation, you have a line of max accumulation, and that is your support. Support and trade location to identify, look for a reversal. That's exactly what happened today, for example, in the ES. Look here. Oh my God, what did I do? Oh my God, all right, never mind. So you had the rally, went down, where did it go? This is the accumulation area. How do you know? You could tell by identifying that it's extremely important is these bars. Once I identify that, it's game over. When you have a rally, even if you want to skip the breakout, just go directly towards the support area and find this bar, the thrust. So for example, this, I'm looking right here. And in this level is the level it's going to respect when it comes back. Bang. So it rallied. It rallied here, but this didn't pull back enough. So it went all the way back down to that area. This structure is what you need to know. When you have a support level, you will have accumulation, creates support, and breaks out of that support, confirms that support by way of a thrust. This is the thrust that confirms the support, and the support has within it accumulation level, and that's what got tagged. Bring this down. See, that's the level right there. See that blue level? Bingo. That's the accumulation here that caused this rally, which is where the market targeted. Tap, they came in. Bang. Okay? So understand the structure of a rally. As you see a rally, which is an impulse wave, go right to its support level, look for the thrust. Before the thrust, look for overlapping bars. Within those bars will exist a maximum accumulation level where CM or composite man, composite operator, strong hands, they loaded up, they bought, they purchased, and they bought so much that they actually caused the rally. All right, so that's the thing. Now the thing with this indicator is, like, the more data you have, the more messed up it'll get. So you want to focus on the current rallies by not having too much stuff, too many bars. Focus on the current rally. So right here, came and tested. Right. So, and also do not use any indicator. If I was to use this indicator, you could use, it's called developing value or developing DPOC, but it's totally useless if you don't understand the structure of a rally. If you don't understand that the rally came from a support that had a thrust, a markup bar. Before that markup bar, you had accumulation. In that accumulation is the level. And then you use this indicator to identify that level and wait for price to go there. Then you go to a lower time frame and look for the reversal. So for example, as price goes to that level, what do you start having? As price goes to that blue level, before the thrust, right? Before the thrust from support, there was that blue level. That's your maximum accumulation level, at least for that, relative to that rally. As soon as price goes there, look what happened. It turned. It went from red to breakout, higher low, higher high, rally. See that? So you want to use the indicator on a higher time frame and then look for the turn on a lower time frame. But again, the focus is to find the max accumulation level, and the only way that can be done is to work backward from the rally to the thrust from support, coming from an accumulation area that has the line of max accumulation, which is what you use the indicator to identify. And then goes there. When it goes there, lower time frame, shift. Market goes into an uptrend. That's the reversal. I mean, just take a look. Over here is the biggest price volume in 45 and 46 waves. So, okay. So that's the lesson on identifying accumulation, right? And just show you in crude. You have a rally. In your chart, it's just a big wave. What do? Go all the way back to support. Look for that thrust. You will find the thrust. When you find the thrusts, you look for that level. That level is very strong. It is in the distribution area right here. This is all distribution. You see the overlapping bars? Overlapping bars, thrust. This is the distribution level. That's the level. In this case, you had two levels. One up here and one over here. And it went to this one. Why did it go to that one? Because this market is very weak. And it would have to revert back a lot to get to the distribution. Instead, it just went to this breakout and tested that. Again, with this gold, you have a rally. What do? Go to support. There's your thrust. That's the markup bar. Before the markup bar, what do you have? You have accumulation verified by looking at the bars. Yep, that's it. Sideways, 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 sideways. And then using the indicator to find the level. What happened? Price tests the level or very close to it and reverses, leading to, look at this. See that? It's not going to happen just once. It's going to happen again and again and again. Right? In this situation here. See this break, this thrust? In this area is where it's going to come back to. Why? Because it's a markup bar. What's before a markup bar? Accumulation. What's in accumulation? The max accumulation line. How do you find it? You can use this indicator. If it keeps moving or shifting or giving you problems, you can manually draw it. Like watch. Bank right there. Tap. So I mean, I hate drawing, so I use the indicator. But if it's like, you know, too much data, then I'll manually draw it, and I can look, see the volume profile with a big volume. There's your line. That's your accumulation that caused the markup bar, which led to the rally. And when price pulls back, it's going to go right there. And when it goes there, you go and you look for a reversal. And that way, it's not really random at all, because you're just relying on the prior buyers. So you're relying on accumulation as support. Anyway, so this is extremely important. If you understand Wyckoff and all that, you know, this is not directly in it, but it's like along the same lines of thinking, based on accumulation, based on markup bar after accumulation, because after accumulation, what you have in the price cycle, you have markup, you know, and it comes back down. Where is it going to go when it comes back down? It's going to go back to the accumulation area. Which level do I look at? That's when you start using these indicators and tools to fine tune where it's going to go. All right. Thank you. Have a good day. Bye.